All right, let's answer your questions now. First up, Farmer Jim, it is a question for you. I bought some Cisco lately. I really don't like it this high, only because I don't like it this high. Do you still own it?
I don't still own it. Here's my comment on Cisco. The last 5 years, its forward multiple has been between 12.5 and 17.5. Right now, the forward multiple is 15. You're not going to get much from Cisco. You don't see big earnings growth here. You're not going to get an earnings multiple expansion. So maybe you get a few percentage points a year in price appreciation and the 3% dividend yield. But that's it. This is not the tech darling of 20 years ago. This is kind of like Verizon, almost like a utility in your portfolio. It dampens volatility. If you want it for that, go ahead, but it doesn't excite me.
Okay, Josh Brown, a video question for you. Let's watch and we can answer on the other side.
How's it going? My name is Brandon Bonomo from Long Island, New York, and my question is for Josh Brown regarding Restoration Hardware. Can their momentum continue despite their recent run-up since the home building and home improvement trends remain so strong? Thanks.
All right, good question. Josh, what's the answer for Brandon?
That's a great question. Thanks, Brandon. I like the stock. I think it's going higher. Warren Buffett just added to his position by 41%. We found out in the fourth quarter. We found out a few weeks ago. And you can see why. This company is basically growing its cash flow year over year by about 40%. They are one of the defining companies in terms of experiential retail. You go to their stores, which we'll be able to do pretty soon, and there are cafes. It's just like a very high level furniture and home furnishings. And now they're getting into two other areas. They're going to do residences, like literally they're going to be in the home business. And they're going to do hotels. And I just think this brand has a ton of potential. So if you're long, I would stay long, and has a lot of tailwinds at its back.
Nice gain today, better than 6%. All right, Dr. J, have a video question for you now.
Hilly from Atlanta. John, we love you. Our bank account loves you. You mentioned a few weeks ago about Vail. The numbers are looking good. They're up. What do you think about it now?
All right, Doc, looks like you're making some money for Hilly in Georgia. What's the answer now?
I'm delighted for you, Hilly, and thank you for that shout. I like it, and I think this one obviously is a play for infrastructure, Scott. So what I'm looking for is that bill is going to take several months to work its way through. So either if you own the stock, I would be writing calls in the short term, meaning the next 2 or 3 months. And if you own the calls further out, I would be selling short-term calls, because then you can capture that time decay, because I think it takes at least 3 months before we can get to an infrastructure bill. And I think that'll really spike Freeport, Vale, Cemex, a whole bunch of the infrastructure plays.
All right, Doc, thank you for that. Carrie, lastly to you, Rushy in San Francisco. What should we expect from Netflix over the summer? Is it going to endure competition from Disney? I mean, that's where the battle is, right?
Well, I'm not sure that I can pinpoint what happens this summer, but we know that Netflix has treaded water for 8 months now. I mean, the stock is totally flat if you look at the chart. Disney stock's up 127% year over year, so it's outperformed. Netflix is the leader in streaming and will remain the leader in content development. There can be two players. There are always going to be two. Netflix is the leader, and Disney is obviously going to be the number 2 in the space. If you look out 2 years, the price-to-earnings multiple of both companies is 30 times in 2023. And so we think that Netflix has an opportunity to start to outperform, which it hasn't, as the reopening play. And Disney is both a reopening play and it was a stay-at-home play. So it had the best of both worlds. And it makes sense that it's outperformed recently. But we think that Netflix can come back and can start to be a strong stock again.